got friends only wanna talk business. I got expensive, cause winning's expensive. I got expensive, cause winning's expensive. I've been reading all the war, and I've been shutting down the stars.
And welcome to Put That Coffee Down, the freight sales show for closers. My name is Kevin Hill. I'm your host as always, and it is Tuesday, 12 p.m. Eastern Time here on FreightWaves TV. We have an awesome show, very special guest for you today. It's none other than Ben Gordon, the managing partner of Cambridge Capital and the man who produces the BGSA conference. I think this was the 17th year down in Florida. They just wrapped that in last week. So everyone, CEOs were down in Florida talking about the market, the freight markets, the logistics industry, and we are going to get a fresh perspective and an outlook for 2023 from Ben Gordon here. Welcome to the show, Ben.
Kevin, great to be with you again.
Yeah. So Ben, let's take it from the top. Let's talk about the conference last week down in Florida. Was it the 17th year? Did I have that number right?
17th year. Getting ready to graduate and go to college next year.
I know,
That's
right? Already in the plans for the 18th year coming up next January. I saw on the website.
Yes.
Yeah.
Every January, late January in Palm Beach at the Breakers. So already gearing up for it, and we're excited about it. And this past year, record turnout, over 350 CEOs and supply chain leaders. And Kevin, part of what makes this event special is it is only focused on one thing, which is the CEO vantage point across all areas of supply chain. So we've got leaders in truck brokerage, freight forwarding, warehousing, all areas of supply chain technology, US, Europe, Asia, LATAM, worldwide. And it's a place where things happen. The Uber Transplace deal took root. The team leaders first met at our event 3 years ago. Just yesterday, two of the CEOs that were at our conference announced the deal, the WiseTech's acquisition of Invase, and lots more. So it's a place where we think the best and brightest get together to talk about the big issues in strategy, technology, finance, and to make deals happen. So it was a terrific opportunity for me to learn, and hopefully for everybody.
It's always magical where you go to conferences where deals happen. It's fantastic. Looking into 2023, the crystal balls of those 350 executives, what's everyone seeing? What are you seeing for 2023 when it comes to both the logistics industry and the freight markets in general?
So, Kevin, it's a great question, and it's the question that I think we all want to know. What's really going to happen? And one thing that we do that I think helps to get a little bit more perspective on this question is we don't just talk, but we also listen, and we survey all the CEOs that come, and the majority of them answer. And so I'll share with you some of the data, and I'll put it up on the screen. So one question that we asked was, how did you do last year? What was your growth last year, and what do you expect this year? And interestingly, over 160 CEOs responded. More than 80% said they had double-digit growth, more than 10% last year, and almost as many, about 73%, expected double-digit growth this year. So what that tells you is that the leaders of major companies in supply chain are very bullish, and that is a fantastic sign. And you could say, well, self-reported data, how good is that? But historically, if you compared this to other years, it hasn't always been the case. So I think surprisingly bullish. One comment that sits behind that, if you listen to some of the panels, like for example, we had a trucking panel with, I think, $24 billion of revenue represented, CEOs of Yellow and Estes and Covenant and others. And what we heard was pretty broad consensus that they're expecting a rebound in the freight markets in the second half of the year. People feel good about the fact that rates seem to have bottomed out. I know this is something that you and colleagues at FreightWaves have lots of data and input on as well. But the CEO vantage point, whether from the big trucking companies or the big freight brokerage companies, and we have leaders of companies like C.H. Robinson, global logistics leaders like CEO of Geodis Americas and others, surprisingly broad consensus around that. So I think that's one. And what's interesting about that is when you look at the economy, look, the consensus that this 9% inflation that we're living through, according to McKinsey, will take 3 years to get back to normal. And this flat GDP also not till 2025 to get back to normal. So all that is tough from an overall macroeconomic standpoint, but the leaders of these supply chain companies all quite bullish. The second thing that I want to add is, people refer to our event as Davos for logistics. It's the same week, or Davos for supply chain deal making. And on the deal topic, we ask people, "What's your outlook?" And I'll show you the data on this because it's, in my mind, shockingly symmetrical. So we asked, what level of M&A activity do you expect to see in the supply chain industry in 2023 versus last year? And it is almost a perfect bell curve where about 34% said about the same, about 27, 28% said less, 27, 28 said more, and about 5% much less, 5% much more. So in aggregate, just as many people bullish as bearish, and the most common answer right in the middle. And then interestingly, among our CEO attendees, almost half said they were very likely to consider a merger acquisition investment or other transaction this year. So what does that tell you? By and large, it's an industry of leaders who are bullish about the market, bullish about their own performance, and putting their money where their mouth is in terms of deal activity.
And I think it's interesting, it's self-reported data, but the sentiment or the qualitative aspect of it, I always find that more interesting really than the numbers in a lot of ways, because the numbers tell you what has happened. It's a lot of times rear view mirror looking, where the sentiment is, as you said, everyone's bullish about this year, especially in the second half of this year, and they are going to act accordingly to that sentiment rather than any set of numbers that actually don't exist yet because it's in the future.
Well, exactly. So how do you really predict what's going to happen? I mean, one is with words, another is with actions, and the fact that people weren't just talking about deals, but one of them was just announced yesterday is a pretty good illustration of that, and lots of others too. I mean, other leaders that Road One CEO and management team was at our conference. They announced a deal yesterday as well. Freightos, whose CEO was at our prior conferences, wasn't there this week because he was getting ready to ring the bell at NASDAQ for their deal going public through a SPAC merger with Gesher Acquisition Corp, which is happening right now. So, look, I think that the robust level of deal activity here is quite strong. And that was something that a lot of people commented on at the BGSA supply chain conference last week.
On the M&A front and the deal-making front, what are some of the drivers in 2023? Is it much like it was in 2022 and 2021, or has the intentions or the motivations for deal-making, has that changed a little bit?
It has. In our view, and I'll share with you on the screen a few of the thoughts, but we've really seen five major themes that reflect what's driving all the deal activity in supply chain. So one of them is just plain old consolidation. You and I are in the same industry and we merge because we're going to become bigger in that one thing. So for example, Lineage buys VersaCold. Lineage is now the world's largest company in cold chain warehousing. So they buy VersaCold as they continue to build out their warehousing footprint. Another example would be service expansion. You're great in one area and you buy a company that's adjacent to continue to expand. So Werner in trucking buying ReTMS, expanding in the truck brokerage arena. A third would be e-commerce logistics service expansion. So you're an e-commerce company and you want to provide a broader supply chain solution for your customers. So Cart.com buys FB Flurry, combining their e-commerce capabilities with more fulfillment. A fourth is cross-border. You're a European powerhouse and you want more in the US. So for example, Geodis, of course, the French-based global supply chain giant, buying Need It Now in the US to expand their last mile. And a fifth is just capital, doubling down on winners. So you're an investor in a business, you're putting more into it. Tiger, for example, which invested over a year ago in green screens, just put another 5 million in a little over a month ago, at a big step up in value because they're doubling down on their winners, right? So those are 5 examples of themes: consolidation, logistics service expansion, e-commerce service expansion, cross-border, and investors doubling down on winners. And Kevin, we see deal activity across all those areas. And in fact, companies that are on this page and those that are bolded on this page are companies that were here at the BGSA Supply Chain Conference last week. And so they got to talk about it, and people got to ask, oh, why'd you do this and what's next? And I think these 5 themes will continue throughout 2023.
I agree. I like those themes. I like that chart you have up in the synopsis for that, Ben. When we discussed new technologies coming out, you guys did a Shark Tank. I saw on the agenda. Those are always fun. What are some of the exciting technologies coming out? Chat GPT is all over the news. You can't look at anything without mentioning that, and AI coming in. What are some of where are the real tech plays coming from right now?
Well, first of all, there is tremendous innovation, as you know, in the supply chain technology arena. We started doing the Shark Tank because we wanted to shine a spotlight on some of these early stage innovators. And so historically, this was a conference. In the beginning, it was for the big guys, the multi-billion-dollar leaders. Increasingly, the component of the conference devoted to technology and innovation has increased because people are interested in it, because more and more of supply chain today is tech enabled. When you and I began our careers in this arena, and I'm older than you, Kevin, so I'll exclude you for this. When I began, it was nearly 30 years ago, and there were logistics companies, and there were trucking companies, and there were tech companies. They were all distinct. Now, you can't be a logistics company if you're not tech enabled, right? I mean, you look at, an Echo or a C.H. Robinson or any of the other truck brokerage companies, and somebody asked the question at the conference, how do you compete against a digital truck broker? And the laugh was, well, what's the difference, right? I mean, they all have technology and they all have services. And in fact, we see that convergence. So I think number one, there's more and more of a synergy or convergence between technology and services. Number two, the Shark Tank, we had companies that were doing a host of different things, ranging from technology to automate processes, to packaging marketplaces, to freight bill audit and payment solutions, to other kinds of technologies, and certainly that illustrates some of the innovation there. Lastly, and you asked about Chat GPT and AI. Look, in the long run, I think AI will make a tremendous impact, not just in our world, but in the supply chain world. We already see it in certain areas. I mean, the more data that you feed to an AI system, the smarter that AI becomes, and the better it becomes. And so, there are a few companies that use that. I mean, an example is like what Green Screens does is they take companies' data. The more data you feed them, the better the AI could be at predicting what the price should be for that company in that lane. And that's very different from the old way of doing kind of top-down market average pricing, right? So AI, if you think about it, if Green Screens has $5 billion of freight data flowing through it, they could be a lot more accurate. Just like with Chat GPT, the more you use it, the better it becomes at answering the question. Well, it's the same thing in an analytics situation like Green Screens for pricing. So look, I think the more we all use these systems, the better they'll become, and the more it will allow us to automate the various processes that we all see and use in the supply chain world. So I think we're going to see a total revolution. And I think, Chat GPT is a novelty right now. I mean, I'm sure you've used it, and to your audience, if you haven't, you should go ahead and try it. And if you ask it a question like write me an essay analyzing Voltaire's Candide and what it means, you will get a pretty good B+ essay written in about 15 seconds, which is amazing. And so, of course, if you're in high school or college, well, it's kind of scary if you're a professor. But that's just the beginning. Think about how much more you can do as you feed more and more data to these systems. It's gonna be transformative for all of us and all of us in logistics.
Yeah, when we talk about like that in baseball innings, I know that's a analogy that everyone likes to use. I mean, I think AI, and especially with Chat GPT, first inning. This is like opening pitch, the first batter. If we go back to what's the difference between a digital freight broker and a normal freight brokerage, I think last year UBS published their download rate, and one of the things that stuck out to me was that the digital freight brokerages are mainstream now. They're kind of in the same grouping as everyone else's downloads, what people would call legacy freight brokerages. All that time and investment over the last few years has really panned out for them. And it seems like everyone is a digital freight brokerage now. There's a certain amount of lanes and freight that they're moving that is without human contact in a lot of ways, and that's growing as the years go by.
Yeah, whether it's the first pitch or the second pitch, it's clearly very early in the game, and I think what I've noticed is some of the smartest and most innovative companies in supply chain are saying, "Hey, let me pilot some of these different systems, start working with them, and then see what works." And that's what I recommend. I mean, you're not gonna bet your company on using one other technology, but use it, experiment, try it. I think if you look at what companies like, I mean, there are a whole host of them. NFI has been very innovative. Echo's been very innovative. A lot of these companies, will, on the one hand, build big internal engineering teams, but then on the other hand, spend some time and money using some of these outside companies, whether it's software, whether it's hardware, driverless trucking or driverless applications in the warehouse. There's so many of these. My recommendation is, I think, most giants in supply chain, if they want to stay giants and get bigger, or if they're mid-sized companies growing rapidly, allocate a portion of your revenue. I mean, if you think about it, tech companies might spend 15-20% of the revenue on R&D. Well, if you're a smart logistics company, what if you just allocated 2% to spending on interesting technologies to see how it goes? Which, if you're right, you should get massive productivity benefits coming back. And I mean, I can give you some examples. One of our companies, we have 8 companies in the Cambridge Capital portfolio. It was here last week. Reverse Logics, which is really pioneering returns management software. So if you think about what a WMS does, it automates the process of how a product moves through the warehouse. But it turns out that returns cost 10 times as much going backwards as shipments do going forward. Why? Because it's lower volume, it's more one-off, more customized, and the more you can automate and repeat, the better it goes. It's harder to do that for these returns. So Reverse Logics has aimed to become the first and best in true end-to-end returns management. So it's a returns management system, an RMS, just like TMS, WMS, and OMS. And by doing that, they are automating returns in a way that can save tens of millions of dollars in labor for companies like, for example, large warehousing companies. If you were a FedEx or a DHL or a Ryder or a GXO or one of these other multi-billion-dollar companies, the labor that you spend on returns is just mammoth. And so if you can automate that, streamline it, and take tens of millions of dollars and time out, whatever you spend on the software is a tiny fraction of the productivity gain, and that's really transformative. So I think we're seeing more and more companies interested in adopting these kinds of technologies. And like I said, if you spent 2% of your revenue on these kinds of automation initiatives, and it could produce 10x benefit for you, it's to me, that's what's going to separate winners from losers this year.
I agree with that, and I think if there is one place to start, if your business has anything to do with the returns, that is the perfect place to start experimenting, because that is a huge pain point for any shipper out there, especially LTL carriers who are dealing with returns. Everyone's all the retailers out small SMB retailers up to Walmart. The majors are competing on, certainly Amazon being a part of that as well, competing on the ease of return and being able to return things. And as you said, it's 10 times more expensive, and I can believe it because it's a total mess, a nightmare for retailers right now.
Exactly. For retailers, for brands, for logistics companies, and yet it turns out that returns from a logistics standpoint can be a huge profit center, right? I mean, there's a reason why FedEx paid $1.4 billion for Genco because Herb Shear and the Genco team built a market leader years ago. This deal happened 8 years ago in returns management. It can be a massive profit center. And GXO recently said, I think something like over 40% of their new customers came on board in part because of work they were doing on the return side. So look, returns could be a profit center for logistics companies, and for brands, it could also be a way to really build the customer relationship, because it turns out that something like over 80% of customers say that their experience with a brand when they go through a purchase and return influences whether they'll buy again. So therefore, brands care, and they should care, about making sure that their consumers have a great experience. And they might think the job is done once they've made the sale, but the truth is, that brand relationship with the consumer continues. And if they don't have a great experience on the return, they may not want to come back and buy again. So bottom line is this is an opportunity really for brands, retailers, and logistics companies to do better and make more money.
You're definitely right about that, because that is part of the brand experience. Ben, the last time we chatted on camera or on stage was in Arkansas, FreightWaves Future of Supply Chain. Part of that conversation that we had on stage in our fireside chat revolved around humanitarian efforts in Ukraine, the war in Ukraine. That was 8-10 months ago now, I guess 8 or 9 months ago. How has the situation changed? Has it changed? What's an update on that?
Well, first of all, thank you for asking, Kevin. And I think it's important to shine a spotlight on what's happening in Ukraine, because it affects all of us. I'm not Ukrainian, and neither are you, but as people who care, it affects us all. And supply chain has a unique role to play in being part of the solution, because so much of the humanitarian crisis in Ukraine is because of people who are dying because of lack of basic needs, like, for example, healthcare supplies. And if we get more first aid supplies into Ukraine, we can save more civilian lives. And that's something that those of us who are supply chain professionals can do something about. So in my case, I helped start an organization called the Ukraine Logistics Coalition. We have raised or donated more than $20 million in medical supplies to bring in, vital needles, bandages, and various other equipment. We've also partnered with a variety of other organizations. One of the great things that we all got to benefit from last week was we took day one of the BGSA Supply Chain Conference, the very second panel, really when everybody's there and paying attention, and we brought together 5 great leaders to talk about the humanitarian supply chain. And so that included my friend Vlad Bilanovsky, Chief Execution Officer at WiseTech, who was talking about Ukraine. He's also been involved in the Ukraine Logistics Coalition. My friend Ariel Zwang, who's CEO of the JDC, largest American Jewish humanitarian organization, of which I'm on the board, also doing great work bringing supplies into Ukraine. Chloe Demrovsky, who's the CEO of DRI International, which trains professionals in disaster relief. Kathy Fulton, CEO, Executive Director of ALAN, the American Logistics Aid Network. Rick Morrell, CEO of Saltchuk, which has done lots of amazing work on hurricane relief. And so all of them got to talk about what they're doing. And one thing that I would encourage everybody who's listening is, you want to get involved. We all care, right? How do you translate caring into acting in pursuit of that goodwill? These are all great people running great organizations, and I would encourage you to reach out to any of them or to me, because they're all involved in different ways of helping to use supply chain for good. And so as we talked about on the panel, this is all about going from success to significance, right? We all have had a measure of success in our lives, such that we have the luxury of being able to think, how can I use my time, talent, and treasure for good? And this is a time to step up and do it.
It is, and it's such a worthy cause, and a lot of logistics individuals that work for U.S. companies over there affected by the war that really seemingly has no end in sight. So I'm glad you guys are doing that. Do you have a website as well for that mission?
I do, Kevin. Thanks for asking. It's logisticscoalition.org. And if you go to logisticscoalition.org, you will see, number one, that there are a set of other supply chain organizations who are donating time, money, and in-kind resources to help get goods into Ukraine. So, for example, donating trucking, air freight, and other capability to get there. Number two, you'll see a list of key needs that groups on the ground have, whether it's the JDC or Ukraine-specific organizations or otherwise, and you can see what they want and need, but a lot of that's medical supplies. And then number three, you can see some of the other people that are involved. And if to those of you who are listening, please get involved. Reach out and take a look at what's happening at logisticscoalition.org, and let us know. You can reach me directly, ben@cambridgecapital.com, or through LinkedIn. My LinkedIn handle, Benjamin Gordon 18, or Twitter, Benjamin H. Gordon, or otherwise. And we would welcome the help, whether it's donations of time, of in-kind supplies, or anything else, or money, of course.
Always money. That's always a good gift. Ben, thank you so much for stopping by here. Put that coffee down today, and good luck with the 18th year of BGSA. I keep on saying BGSA conference, and in 2023, we'll check in with you here in maybe the second quarter and see kind of if this sentiment that we're seeing right now continues on. So,
absolutely, Kevin. Thank you. Great to be with you as always. Keep up the terrific work.
Thank you very much, Ben. And that wraps it for this episode of Put That Coffee Down.
I got friends only wanna talk business. I got expensive, cause when